Hello, this is Blake, back again with Financial Markets Language. Today we're going to be going over what happened on the market February 27th, 2023. Today we definitely had an eventful day in the market. We kind of saw a reverse of what we've been seeing in the recent past, as in the last 2 weeks. We saw a good sized decline in the dollar. The dollar currently sitting at approximately 104.70, and likewise we saw a decline in bond yields. We currently have the 2-year sitting at about 4.8 even. Definitely would make sense given that the 2-year, kind of more or less has to price in what's going to happen in the near future. And obviously we're predicting, the next rate hike to bring us up to at least a 4.75 on the federal funds rate to a 5% on the upper end. Potentially, obviously, we could be at a 5% just after this next meeting that's coming up on March 22nd. And this will be following the big CPI that we're looking at that's coming out March 14th. As far as other things that happened in the market today, we had the Berkshire earnings come out. It was a loss. It was projected to be a loss, and it most certainly was a loss. Obviously, everyone's kind of down this market, including Warren Buffett, despite a lot of his investments being commodity based. He definitely took less of a loss than the average S&P 500 returns, but for the last year, but was still a loss. The fund lost $22.8 billion, and a lot of that was from the unrealized losses that were approximately $56 billion. Take in mind the actual revenue was up, the trading revenue was up from clients, and so the company was able to make a profit, but obviously the fund value declined due to market insecurities. Another big thing to note is that the cash pile within Berkshire Hathaway has been slowly increasing, is now at record highs, definitely symbolizing that he's planning on potentially buying the dip, as a lot of people would say, if markets continue to do what they've been doing. Durable goods orders declined more than expected. They were down 4.5%, despite the analyst expectation of negative 3.6%, and more than last month, which was 2.3%. Definitely symbolizing that companies are investing less in their core business, just for the means that, why invest now at record high prices for individual items when you could obviously buy these items if we have a disinflationary cycle, which a lot of people are predicting in the near future, and save the money. We're obviously right now, you're also getting the margin compression. So by spending a lot on your business, you're going to crush your margins even more. And on your next quarterly report, you're going to look even worse than, if you did not make that investment. So a lot of people are holding back, trying to maintain margin and hoping to buy the goods they need for their business or to expand their business in the future. As far as core orders, they were barely up at 0.8%, which was higher than the last month of negative 0.3%. Definitely showing that as far as core items, there is still being some expenditure there. Another big thing to note was pending home sales, way blew past expectation. It was expected to be a 0.9% increase on the month, but instead we got an 8.1%, which obviously annualized, you're looking at, practically an almost 96%, annualized increase if you, multiply by 12. Which is huge, obviously. You saw a lot of people rush in and buy housing, which is unusual for a January month, which is probably why, the percentage gain was so high, because housing data is done month by month. So obviously, compared to last January, you definitely saw a big increase, and December came in a lot weaker than expected. So there was a lot of catalyst for it to run high, but even with that, analysts weren't predicting nearly as high. They were predicting 0.3 instead of the massive 8.1%. Definitely quite a switch up. As far as notable stock moves, you saw AMC, the good old-fashioned meme stock, completely take off today, do approximately a 22% move on the day. A lot of that being the fact that bankruptcy apparently is looking less inevitable, and they're not going to be consolidating the APE shares like some APE holders were hoping when they did the AMC preferred equity shares, known as ticker symbol APE, that you'd be able to exchange them for a 1-to-1 value with AMC. But this never came true, and it more or less got decided today that that will not come true. So essentially AMC was able to dump all these APE shares on the retail, and all the suckers that held them were more or less bailing out the company for them. But obviously, their big objective as a company is to stay in business, and it looks more likely, but it's kind of always looked like they were going under, so they're willing to do anything to keep their head above water. It's kind of like a drowning person will often, push anyone around them under just to stay above water so they don't drown themselves. A little selfish, but in a die or survive kind of mentality, you kind of always pick the survive model, so hard to blame them too much on that one. Fisker is up 30% on the day, despite missing analyst expectation for this current revenue that came in under expectation. It was predicted to be a loss of about 35 cents per share, came in at about 72 cents per share, so definitely was more of a loss. But as far as guidance, they guided upward, and they assured people that a lot of the additional lack of revenue was just caused due to additional investment. But they predict manufacturing to be even higher than expected, and they guided up on their next coming earnings and the earnings after that. So expect hopefully better things from Fisker, and that's why they rallied 30% on the day. But obviously, I would highly advise against investing at them after this point. A lot of that was just simply due to the short covering, because a lot of people were expecting the stock to go to zero, and any kind of breath of news that makes it look like that is less of the case will definitely get a big rush of people and a lot of short covering, which is exactly what we saw here today. Fubo TV was down 16% on the day, another big notable mover. They did beat earnings, so you would expect them to be up, but they guided way down, and obviously like a lot of people expected, Fubo kind of had their heyday with the FIFA World Cup, the Super Bowl, the NFL season, and now that we're kind of on like a sports kind of downtrend, there's not a whole lot of people wanting to watch sports. You're definitely seeing potentially cancellation rates go up. You're seeing possibly, and that's why they guided lower for the next few quarters, which was the big catalyst that caused them to move down, just due to the fact that they got a lot of business due to their essentially business being tailored towards sports, and now that sports are less favorable in the eyes of consumers for the next little bit, they're already feeling it and are guiding down. I even think that their guidance was even too generous. They're probably going to post bigger losses going forward. They're not going to keep beating like they've had the last 4 quarters. Data that we have coming out tomorrow, we have advanced U.S. trade balance in goods. The last month it was at negative 90.6 billion. And then we have advanced retail inventories. Last month was 0.7. And then we have advanced wholesale inventories. Last month was 0.1. And then we have the S&P Cash Shiller Home Price Index. Last month it was 6.8%. Definitely was a big tick up there. No expectation for this one, but I would definitely expect, and I imagine most people expect it to not be as high this month, given a lot of the activity that we've seen just today in the housing market. The Chicago Business Barometer is expected to come in a little higher than the previous month, but still below the 50. Anything below 50 is shrinking. Everything above 50 is growing. And then as far as consumer confidence, we're expecting it to tick up again in February. Definitely showing that despite wages not going, as high as people were hoping, people are still spending, to keep up with inflation. Definitely not seeing generally a trend down in lifestyle. People are taking out credit and continuing to purchase items at the same rate despite prices for the same items being significantly higher. So more or less giving consumers confidence on the index, but a lot of this will almost certainly inevitably come out to be fake confidence. It's just more of a question of when, and if it happens abruptly, or if over a slow period of time we just have slower growth as people try to pay this back, which would be the best option, but typically it tends to be more abrupt. You have, one domino falls, everyone loses their job, tons of people with debt, people can't pay back the debt, and yada yada yada, spiral. People tank credit score wise, debt doesn't get paid back, and businesses that hold the debt for them now just eat the loss, and that also continues to spiral into the economy. But typically there's probably going to be an event that has to cause the job loss that isn't necessarily just the debt, but that could easily be these interest rate hikes that we continue to see, or the housing market crashing and a lot of people losing their jobs, because obviously the housing market in general provides a ton of people with jobs, contractors, agents like myself, landlords. There's definitely a large part of the US population that's involved in housing in one way or another. As far as big earnings we got coming up tomorrow, we got Target coming out. Definitely been a wild ride for Target. They've continuously reported on increased retail theft and that eating into their margins massively. So curious what we're going to see into regards to that. They're expecting a decline in revenue from the previous month, but still a profit, obviously. They're a brick and mortar retailer, typically low margin, but the second they go unprofitable, they tend to just kind of go under, because what's the point of running a low margin business if you have negative profits, quarter after quarter after quarter? But obviously they've been in the positive in the recent future. It's just a question of, how bad will these margins get hit, and will it ever go negative? And what would be the result of that? Thanks for watching. I hope you were able to learn something. Best of luck in the markets coming up tomorrow on the 28th. And I look forward to seeing you on the night of the 28th, and we'll go over what happened and what we're looking forward to the following day. Thanks for watching, and I'll talk to you soon. Oh God, I'm tired.